I like how you whoop, whoop.
What is going on YouTube? It's Brendan from Market Makers. Guys, if you've been watching my channel and only on my channel on October 23rd, look at the thumbnail. I gave you the diamond pattern breakout for Bitcoin. It has since moved up 33%, now at key resistance, but you captured a 33% move in Bitcoin. This is on the back of other major trades I gave you, 43.82 on the S&P for a 300 bar drop. And now our S&P short, our new short, is also in profit. If you took the NASDAQ TA and traded it, you are in great profits. So we're going to cover all these levels, do a deep dive on Bitcoin, look at the US equities, the European equities, and individual equities, as well as my favorite proxy to trade Bitcoin, MSTR, Michael Saylor's company, and see what we can see for patterns and look at what we have for confluence to continue to make you guys money. This channel is based. Please do like and subscribe, support this channel. Consider checking out our Discord. Consider checking out our sponsors. All that information is in the video description. Lee, without further ado, let's get this show on the road. All right, guys, let's go ahead and start off on Bitcoin. So this has been a fantastic breakout, a fantastic move. Guys, if you want to consider joining our Discord, now is the time to do it. If a professional staff, I'm there every day. We just did a live stream on Bitcoin, gold, and some of the other assets this past weekend. You get all of that for free when you check out one of our two fantastic sponsors, SimpleFX and BingX. You get our exclusive bonuses with our link. And on SimpleFX, that equates to a $5,000, up to a $5,000 instant first-time deposit bonus, only available with our link, guys. Check out those exchanges. They sponsor the show. They bring you this content, and it helps support me. So let's go ahead and jump right into this, guys. All that information, by the way, is in the video description. We're going to start off on the weekly chart on Bitcoin and zoom in, okay? Zoom in all the way to the 4-hour. This is very important to see. So we have our diamond pattern breakout. We broke our fractal high, 31.8. Got this great up move. We have harmonic expansion here, 41,186. Couple of things I want to show you on the weekly before we zoom in. Let me go ahead and pop this open. Look at the MFI. Now, for those of you that aren't familiar with the MFI, Bill Williams developed this. It's a volume-weighted RSI, okay? Bill Williams' trading and his concepts heavily influenced my trading. This is the indicator I have on every single chart. Sometimes the only indicator, but it's on every single chart. We are in overbought territory, but I want to show you what this means historically, okay? This is why we're on the weekly. Let me pull this down so you can see this. Now, remember, Bitcoin is a parabolic asset, very parabolic. You've only been overbought on the weekly time frame on Bitcoin 3 times since this cycle started. This is the 3rd time you've been overbought on Bitcoin. I want to show you this because here's your first time. It was your run up to your first all-time high. And notice where you hit the overbought reading on this candle when Bitcoin was trading at 42. And of course, it went all the way up, guys, to 65K. So this is divergence, and Bitcoin divergence, because it's parabolic, because it's highly volatile, moves at a 3x beta to the NASDAQ. This is how you can get this type of divergence. But look what the MFI did. It just kept steadily making lower highs, lower highs, lower highs, and then dipped right off. And then look at the second divergence here. So you got up to this candle here when Bitcoin was trading at 63K, and you went all the way to what, 69,127 before you sold off hardcore and then got oversold. So I want to look at this with you because this is the 3rd time now we've been overbought in the weekly. Doesn't mean you couldn't push higher, because obviously clearly you have in the past, but it's a clear red flashing indicator that you need to pay attention to, okay? So let's go ahead and look at this. I want to look at these average drops before we go to the smaller time frames. So once we had that divergence set in, we kept running up. What was that percentage drop that we did? 55, almost 56% if you round up. And from this all-time high here down to this first move down, you're looking at a 52% move, okay? Now, obviously, this ended up cratering all the way down to the market low of 15.4, and that is a 77, 78% move. And of course, my retirement trade on Bitcoin, why I love Bitcoin, was right in here at our Ponzi W pattern, 48.2, to capture a large portion of this move. Okay. So what we want to do here is look at this. We have an average of a 50, 55% drawdown once you get overbought on the weekly. So let's just look at a couple of things here on the weekly, and let's look at other fibs we could be hitting. And the easiest target here is to pull this from the all-time high, and you're going to be right at the 486, okay, the 50% retracement. 486 is a Kepler number. We'll go over that in some other video. 486 is 41.5, and that's what you're just beneath right now. You're at 41.508, and the Kepler is 41,529, so you're just beneath it. 50% retracement, Dow theory, the natural halving and doubling in the marketplace. The markets adhere to the natural law, guys, and this is why you need to understand natural law to understand potential trade setups as they develop. Fantastic breakout once again. Shared it from this fractal high, and look at this move up. You got a 32.5% move up off the long that I shared October 23rd. If you need to view these markets, in my opinion, as traders, we're not investors until the new market lows come in based on the high probability of the recession coming, because all the recession indicators flashing deep red, which have a 100% accuracy for predicting recessions. When new lows come in, we'll go over that in detail. We have done this many times in other videos. We'll go over that in detail in other videos. This is the trading video, so we're going to look at all the charts for these assets. But when new lows come in, that's when I put my investor hat on. This is my trading hat, guys. Could we get to the 618 at 48? Sure. We already showed you that divergence on the weekly. Price can continue to rise, but we need to look at this in confluence with the US equities as well, okay? So we're at 41.5 here. Let's go ahead and pull this fib off, just so we can see this from this perspective. Let's just draw this down. I just want to see what this would look like if we end up, and let's just assume, and obviously this is really early, this is not a pattern having one candle, okay? But let's just assume this is the top. Let's draw it down 55% and see where that takes you. It takes you right back down to your market lows over here, okay? Close to your market lows, 18.9. 19K once you're overbought on the weekly. And again, we could go up some more. We're going to look at this in some smaller time frames and in confluence with these other assets. Let's go ahead and do that now. It's just something to pay attention to, guys. So here's our fib, our Kepler fib as well, the 41,497. So 41.5. We're on the daily chart now. I want to show you this from the daily perspective. We zipped up from the daily. Let's look at our indicators on the daily. You're not overbought on the daily yet, right? So you have bearish divergence going on the daily, and all the time frames, I think, pretty much underneath it. In other words, if you look at my MFI, you have your high here on the MFI, and then you have this bearish divergence. Price keeps rising as the MFI drop. Now the MFI is trying to work that off and come up, and let's see if it can take out that previous high, cancel that bearish divergence. But when you start zooming down to the smaller time frames here, guys, look at the 8-hour. 8-hour, you got overbought on the 8-hour now. Okay, so you're starting to trigger all of these different. Let's look at this on the 4-hour. Get rid of this line. 4-hour also overbought. Overbought on the weekly, working your way up to overbought on the daily, and you're overbought on these smaller time frames as well. So it's just a confluence indicator for what you can look at for trading Bitcoin. And we're on the 4-hour now. So let's just look at the 4-hour time frame and see what we have. You don't have enough candles up in this range. Obviously, we just made this high, early morning or last night, about 8 hours ago, I guess you could say. So let's look at this on the 1-hour and just see if we're developing a trading range here on Bitcoin. And small time frames, guys, do not have powerful expectations, okay? But you can start to get an idea, right? So you can tap out here at your top, 42,157. And then let's see, we have our move down here. It's all in the same candle on the 1 hour. And this is your miniature Wyckoff trading range right now. You're at 41.4 right now. So you want to see if Bitcoin starts going sideways, starts making some different moves. You got overbought in the 1 hour as well. You have a MFI rolling over, not wave divergence, but wave momentum starting to die off. And you can see it in the price, and you're at 41.4. So this is an area we want to pay attention to. Just above the, well, now you're just below the 50% retracement from the all-time high. You're just above your 2618 target here of 41,038. So ideally, you'd want to be able to hold this on any type of pullback. You want to be able to hold that 41,038. You want to be able to come back up, maybe start accumulating or get a W pattern, start going sideways, work some of this steam off if you're going to stay in this area. And in the meanwhile, what am I going to be looking at? Well, in the larger time frame, like the 4 hour, 8 hour daily, once we have more candles, I want to see what type of patterns are going to start to present themselves, because we could have this sell down, we have the move back up, you could come back up, make a lower high, start going sideways, make your W pattern. If you make your W and break out to the upside, you want to flip this just like our last fractal trade. You'd want to flip 42,157 to have more upside. Again, this is a small time frame, 1 hour. And conversely, this can get very bearish as well, right? Especially if the markets continue to sell off this week. They're all red today. We're going to look at those in a minute. But if this pulls down, comes up, makes a lower high, pulls down again for a deeper low, maybe taps our support, makes another lower high, you have to start looking at your consecutive lower highs and look at any trades that could present themselves: double tops, 5-wave patterns like head and shoulders. These are all things you need to watch as traders. But as of right now, not a lot of candles, guys. And when we zoom out to at least the 4 hour, you're looking at some supply wicks here on the 4 hour candles. Nice rise up to that 42,157. You want to see if you can hold above 41,038. That's your key level on Bitcoin. And always view everything from a larger macro perspective. 50% retracement is a key retracement level. Look at what the other markets are doing. Are they selling? Are they buying? And of course, they are red today. So let's go ahead and jump over to those. Look at the S&P. So the S&P wanted to threaten my stop loss I had at 46.10. You guys know I'm in a short. I'll show you that on the other chart. But look at the candle now, 45.50. Okay, look at this big bearish engulfing candle at this point. The market's very early. It's only 10:30 Eastern time. I'm getting this video recorded. But 45.50. Look at the S&P. We'll see how this finishes out. Remember, I'm expecting a strong retracement. We've been over the Puet's crash cycle many, many times. Again, I know I told you I'd do a deep dive, but I really want to focus on the charts today. But looking at this, we have the Puet's crash cycle set up. You see this oftentimes in every major crash that he studied, which was 8. This is also a pattern in the GFC. You have the Ring of Fire solar eclipse. You have followed by the lunar eclipse. This gave you a top for a 300-point drop. The lunar eclipse gave you the exact bottom. Market rallies up. Should we be topping here? That's what I'm looking for, is this topping and this retracement. And we're going to look at that on the other charts, because I shorted this. I gave you the target for the S&P, the target for the NASDAQ, as well as Bitcoin. This is what we're at now, guys, in the market as traders. Let's go ahead and put these targets back up here. S&P. Looking at our target, 45.84. Obviously, it held. It was struck beautifully. We got above it here all the way to 46.01. And now we're at 45.50. What a difference a day can make, right? What a difference a day can make. So my stop loss was really tight. This was a very tight stop loss at 46.10. It didn't get there, as you can see. This is the previous rally high at 46.09. But just to be safe, I went to my normal 2 ATR stop loss, which is 100 points from entry at the time that I did that. So my stop loss is now higher up. But that doesn't matter today anyways, because we're at 45.50. So if we continue to decline, my stop loss is going to be at break even soon, and this will cost me nothing. Even if it rebounds and does some type of crazy move, it costs me nothing. Risk mitigation is key to being a successful trader over the long term. So we have our Ponzi pattern in the market, our W pattern here on the S&P, on all of the indices. This was our harmonic target here, 45.84. We did not take out the rally high, at least not yet. And of course, we should get some sell-off and possibly another move back up, give us another possible trade entry Don't short on red days. You short on green days when you form a pattern and targets are hit. Okay. That's a rookie trading thing. Do not chase declining prices and don't chase rising prices. But right now, this is playing out absolutely beautiful, absolutely textbook to the T. And why wouldn't it? We have bearish divergence on the MFI. We made our high and kept making higher highs as price or as MFI was going down, momentum dying off, wave divergence. So everything is telling me this retracement should be coming into place. And if it plays out in the Poet's crash cycle, 2 to 4 weeks of selling, okay, which takes you all the way up to what? All the way up to the FOMC meeting on December 13th. And let's just look at where this retracement could go to once again. Let me get rid of this W. This retracement, even a shallow retracement, should take you down to 44.11 at the 382. And I'm not expecting it to drop straight there. You're going to get some type of pattern, right? Our three-wave Ponzi pattern, our M pattern, a double top type pattern. So we could have some deeper retracement here and then come back up. And this is an opportunity for another entry if the markets are still looking quite bearish, guys. And if they are, then this is your first target, 44.11, second target, 43.59. And of course, the 618, the most commonly retraced to fib, is 42.94. Yet again, another 300-point drop if we get to the 618. Even if this reverses and starts coming back up to the upside to challenge this previous fractal, rally high fractal, and rally to a new all-time high at the end of the year ahead of the recession. Even if it does that, this is still money. We're making money right now. And that's the whole key to trading because we already know where the market's going when the recession hits. It's going to the exact same levels it has historically traded at in every single recession cycle since World War II, a 33% sell-off, which takes you down to 3,200, the 618 on the fib from the all-time high. So that's where the market's going ultimately. This could be one possible roadmap, the upside roadmap. The other roadmap is a lower high after this sell-off, and we're going to trade that too if it gets to it. But right now, like I said last video, focus on making money, which is what we're doing right now in these markets. You made money on the long on Bitcoin. You're making money on the short right now on the S&P. So pay attention to these charts, guys. We'll see how this plays out. Let's go ahead and move forward. Our fractal pattern still intact. We did not take the high. Again, this is the equidistant market symmetry moves. This is market geometry. 201 bars on the sell-off, 203 bars on the rally. And if this plays out, we're looking at 202 bars, taking you out to May 6, 2024. That low could be 3,200. That low could be deeper. We have to see what develops here. This is quite a bit away still to see what develops here in the market, how quickly the market gets afraid of the recession, right? I guess I'll have to do that Black Rhino update on Thursday. So be sure to tune in to Thursday's video because you're going to want to watch that. We're going to go over all the economic indicators again, but let's focus on the charts here in this video. Look at the NASDAQ. I mean, this is what's amazing about Fibonacci. Ponzi W, right? Ponzi pattern in the market. We have our expansion, harmonic expansion, the 1618, struck it beautifully twice. Look at this, struck it beautifully twice. And look at the NASDAQ. It's selling off. Last video, I told you, watch 15,699. Where are we at? 15,7. We're there right now. If you would have told me, Brendan, you like the gamble. If I told you from the W patterns, either the S&P or the NASDAQ is going to break the 1618. Which one would you pick? Obviously, I would have picked the NASDAQ, right? But the S&P broke the 1618 and the NASDAQ did not. And that's how trading works, guys. So if this ends up holding up, then maybe we get some type of lower high rebound here. If not, this was an awesome area to trade. I've been sharing this, guys, for weeks. This isn't something that just started last week. For weeks, you've had these targets. So I saw in the comments, some of you shorted the triple Qs. Some of you shorted here on the CFD indices or CFD exchanges like SimpleFX, and this has been an awesome move down from 16,144 to 15,718, and you want to see if these areas hold up. Let's look at the NASDAQ indicators really quickly. Bearish divergence on this whole rolling over top. Look at this on the daily time frame, bearish divergence, confluence of indicators. Let's look at gold because gold did something. Look at it dumping now. So Peter Schiff, really happy up here. And now it's coming down. I want to show you guys this on a 3-day chart because it's really important. So 3-day chart, this is starting back in August of 2020, basically 2075. We covered this in depth on our live stream over the weekend as well in the Discord. 2075, essentially 2075, almost 2075, and broke well above it, the euphoric top. And look at everything's retracing. Gold is not moving inversely to the market, my friends. Gold has a cycle that it does, just like it did in the GFC. It sells off when the markets sell off. Hence, you're at 2022, all the way down from 2150. You got there yesterday, 2150. Last night, you're at 2150. You're already down $130 in a morning trading session because the markets are selling off as well. And the GFC, gold fell 34%, silver fell 61%. They bottomed first and then rallied up. And I think you're going to see the exact same thing. And I told you guys last video, I told the Discord, do not get excited unless gold can take 2075, not only take 2075, but do what? Here's your peak. It should have came back and made its reaction candle in a trading range on top of the Wyckoff and then started doing the Wyckoff movements to want to break out to the upside, break that fractal, break out. And what did it do? It caved right back in. The same thing it did all these previous times over the last 3 years. So be aware of historic market movements. You have to understand market cycles. And most people on YouTube have zero idea of market cycles and what's coming in the next 6 months here in the US and globally as well. So the gold, the real key thing I wanted to see was gold get overbought on the 3-day chart. Every time it gets overbought in the 3-day chart, massive wins, 200 plus bar wins. Again, our short up here at 2055. This was a 250 bar drop down to 1800, and it didn't get overbought here, and it had this euphoric spike. So we're going to wait and see where this settles and see if it gives us some type of topping pattern, because a topping pattern just like this double top, euphoric double top pattern would be fantastic to look for future trades on gold. Let's go ahead and move forward. We're looking at the US 30 here, right? US 30 once again rallied up, exceeded the 1618. You're at 36,000. I went ahead and threw my 2-spot 236 root 5 on here as well. That's 36,442. So 36,442 is where this could go. But, if the markets are topping here, then the outperformance is going to lead to more dramatic moves down, right? So if you have a more dramatic move down in the marketplace, then this is something that you could see here on the Dow. And you look for it to come back to 35.3, back to the 1618 in confluence if the markets continue to sell off. Outperformance on the Dow, outperformance on the S&P, and the NASDAQ hit the target and started to retrace instantly. It's so funny how that works. Let's look at this. So didn't quite get overbought on the MFI, which is why you're holding up better. Remember, this is only 30 stocks. The NASDAQ 100 is 100 stocks. S&P's 500 stocks. Salesforce had some good numbers, I guess, last week? So that propelled this up. It added 100 points to the Dow rally just in that single day. So when you have a smaller amount of stocks, you can see this, right? You can see outperformance based on a couple of big stocks having a big day or something. And that's what the Dow did. Again, this is nothing I'm overly concerned about because it's going to move in confluence with the larger body, the S&P. Now, if you look at this on the DAX, I have a short on the DAX. My stop loss was above 16,530. I'm not moving my DAX stop loss. This is the all-time high here. So if it gets up there and stops me out, it was a normal stop loss on a normal trade. Not worried about it. But again, if we just start going sideways, I'm looking for this to decline as well. Germany's GDP contracted more than expected. I'm expecting yet again another negative print next quarter. And guys, Germany will be in a recession. China will be going into a recession. The UK is at 0%. Next stop is a recession. US is going from 5% GDP down to 2% GDP. After that, next stop is recession, first half of next year. And you're going to see everything declines. I want to see if this trade holds up here. I'm leaving this one alone. In profit already in the S&P, zero risk on that asset. And right now I'm negative here on my DAX trade by a little bit. So I'll see if this starts pulling back down. Got in here just above 16,250, somewhere in that range on this candle spike. So what are we at? 150 points. I'll see if this starts coming back down. If not, I'll let it take me out. I'm very happy with the S&P profit. Let's look at the indicators here on the DAX. DAX did get overbought on the MFI. It's just hovering just below. So again, I expect this, if we get a couple days of selling in the U.S. equities, I expect this to start rolling down with the U.S. market as well and get me back to where I can move my stop loss to break even would be fantastic. Let's look at the FTSE, guys. FTSE Looking at the FTSE 618, 75.39. So the 618 is still holding up. You've tapped it here. You retrace from 75.39 all the way down to 73.84, back up to 75.39. But again, you have that stair step pattern, right, of the higher lows, and you're retesting key resistance. This is a daily time frame. You may want to see, and again, you have the death cross on the FTSE as well, of course. You may want to see if you go into a smaller time frame, you can start getting some patterns. It's a 4-hour time frame. And you can see you had a nice double top pattern here get rejected with the US equities selling off. So start looking at smaller time frames at this key resistance area if you have a bias that this is going to move with the US markets. And if you believe the US markets are going to be selling off more, then you want to look at these key areas of resistance and find these patterns here, because this is a trade, right? This was a trade and you got a little bit of a sell-off, 75.39 to 75.13. If the US markets continue to decline, then look for the FTSE to maybe start rolling over finally, right? After this stair-stepping upwards pattern. Let's look at the NIC. I gave you guys this on the last video. I said key resistance area up here in Wyckoff. To be bullish, you have to flip it, get on top, pull back, and move out. Gave you the upside targets, but I said this is just as easy that you're at the top of the range and you're going to start selling off. And look at this. You were up here. You were up at 33,753, and now you're at 32,883. You had a 1,000-point drop. Okay, you had a 1,000-point drop since my last video. You can trade this on SimpleFX. And if you want to see where this is going support-wise, let's go ahead and pull this up here. You still got to get down to 32,405 just to get to the 382. Now, at some level, you can retrace, bounce up, but look at your first target, 32,405, 32,000, 31,565 for the 618, and you're back in the heart of this range. As of this moment, failed breakout to the upside in your Wyckoff range. And of course, you have a much larger Wyckoff range that you were in for years. We went over this last video. If you're interested in trading the Japanese index, the NIC 225, because this is a larger potential double top pattern on top of your multi-year accumulation pattern. If this breaks down, you're going down much deeper. Let's look at MSTR. Again, my favorite proxy to trade as a single stock in confluence with Bitcoin. Our 1618 target we talked about, 578. Did we hit it? We almost did. 577.77. And I'm recording this video, so I missed I missed the target. If this rebounds some, I want to trade this back up here at 578 on the MSTR, because again, this has a lot to give up. It's been outperforming the NASDAQ. Obviously, if the NASDAQ continues to sell off, guys, it's going to have pressure from the NASDAQ. If Bitcoin starts to top out, pressure from Bitcoin, it's going to give up a lot of these gains. So this is a good asset to watch in this range. And let's see what it does here throughout the day. But this was my target. 1618, 578. You got within 25 cents of it. And let's see if we can start topping in this range in confluence with what Bitcoin's doing. NVIDIA continues to struggle, continues to sell off. We can get rid of that pattern since we never got to our target. We have our double top pattern here in NVIDIA, 3-wave pattern. Broke down. Now you're at the 486. You hit the 486 fib, 450. You're at 451 on the price in NVIDIA. You want to see if you can hold this, and maybe you can get a larger double top pattern if you get a market rebound. And that's another potential trade if the markets continue to sell off. But the 618 is just beneath you at 435. Again, this is going to come down a lot. When people rotate out of tech and they start looking at the safety of utilities and whatnot, you're going to see these start to crack. You see it in Tesla, still in our range of 234. So you need to hold that range of 230 to 252. Bullish uptrend in Tesla, filled our gap, hit our target at 252. If anybody traded it, you're at 234 on Tesla. 2 left, guys. Ferrari, there you go. Ran out of gas. Got above the 1618, outperformed. Now you're below it, and you're looking at this move. At some point, it's going to want to come back up, maybe back test the 357. That's what you want to look at. If the markets are still selling and selling heavily, use that in confluence. 357 is a good area for a potential retest. That retest fails, it's a good area to potentially trade. Look at Adobe. Adobe got above our target, 616 at the 1618. Look at it now, 597. You see how Fibonacci patterns work, guys? Ponzi patterns in the market, W patterns give you high probability targets to make trades. I can't say that enough. If you understand how the market works, how the market mechanics work, how waveforms work, and don't just be stuck into a single system that's a bunch of different rules of how you're supposed to trade. You need to understand markets are dynamic and they will move accordingly. And if you can plot these, understand expansion and contraction and Fibonacci and patterns and esoteric wave theory and cycles, you can get high probability trades, and you can do this to make extra income or do this for a living. Guys, join us for Thursday's video. It will be a new video, and please do like and subscribe. Leave me your comments. I'll answer them as always. Take care, everybody. Happy trading.